ServiceNow currently sits at $103 against a $140 fair value.
That massive gap yields a roughly 36% upside for investors today.
But a fatal $7.75 billion trap lurks beneath. We'll reveal exactly what that is shortly.
Section 1. Business and Financials. Let's dive in.
ServiceNow generated $13.96 billion in trailing revenue. That marks an impressive 22% year-over-year growth. This proves their core engine remains incredibly dominant. They're completely defying broader software macroeconomic slowdowns. Competitors are actively struggling to maintain double-digit expansion.
Look at these numbers. Customer retention stands at a phenomenal 98%. Net revenue retention hit 125%. Furthermore, contracted backlogs surged 25% recently. This ecosystem is exceptionally sticky. Enterprise customers simply do not leave. This means highly predictable cash flow for investors.
Here's their actual cash engine at work. They literally print $4.6 billion in free cash. They operate at a massive 35% free cash flow margin. This enormous cash pile provides ultimate downside protection. It fundamentally anchors our entire valuation model.
Section 2. The AI Growth Catalyst. Now, Assist's already hit a $750 million run rate. Management actively targets $1.5 billion by year-end. Top-tier enterprise adoption is absolutely exploding. Their $1 million customer cohort grew 130%. This proves they can aggressively upsell massive accounts.
Crucially, 50% of new contract value uses non-seat pricing. They monetize AI effectively beyond traditional headcount metrics. This absolutely protects them against corporate hiring freezes. Revenue grows consistently even if clients shrink their workforces.
Enterprises buy these tools aggressively. 70% of AI customers use Now Assist in production. This proves AI is a tangible revenue driver. It's not just empty corporate hype. Real companies are actively deploying this software today.
Section 3. Valuation and Fair Value.
ServiceNow trades at a 23.68 forward PE. Salesforce trades at 34.1. Oracle trades at 28.0. ServiceNow actually looks relatively cheap against these slower-growing legacy peers. You pay a lower multiple for significantly faster top-line growth. Our 10-year discounted cash flow model dictates a $140 base case fair value. Our bear case calculates $79. Our bull case hits $200. These projections rely strictly on compounding their proven cash metrics.
Section 4. AI versus Wall Street.
My model says $140. Wall Street consensus predicts 141.85. The gap is incredibly narrow today. We finally align with the broader market expectation. But getting to this rational consensus was extremely volatile. Analysts projected $192 targets just 3 months ago. Wall Street slashed targets massively after the Q1 2026 earnings report. Sentiment flipped from aggressive optimism to utter panic. But the underlying fundamental business never actually changed.
They fear AI displacement will compress software multiples. Wall Street thinks AI agents will hollow out traditional seats. This bearish narrative completely ignores actual financial performance. Remember that massive 35% free cash flow margin?
Section 5. Major investment risks.
What pushes the stock to $79? Well, Salesforce spends over $16 billion on research and development. Unproven hybrid AI token models might fail entirely. Furthermore, public sector budget freezes could severely delay recognized revenue. These threats could heavily compress their operating margins.
Finally, we must reveal the fatal risk teased earlier. ServiceNow acquired cybersecurity firm Armis for $7.75 billion. This represents a massive, expensive strategic pivot. It carries extremely high operational execution risk for investors.
Armis generated only $163 million in recurring revenue. This massive purchase severely damages return on invested capital. It creates a brutal 125 basis point margin headwind. Integration failures here could destroy enormous shareholder value quickly.
Section 6. Final Investment Verdict.
This analysis strictly presents a conditional buy case for value investors. We focus exclusively on the $4.6 billion in free cash generation. This is absolutely not a guaranteed return. Your investment depends entirely on your personal risk tolerance.
The numbers are on the screen. The decision is yours.